There's not a huge amount of momentum, it seems, right here and now in terms of where to take this conversation. Sure, we've got the tech trade, that dip was bought in the United States. I guess that tells us something.
Yeah, absolutely. I think we're lacking some of the fundamental threats on the horizon that normally give people kind of wonder whether the narrative will change. We don't have an obvious central bank meeting that's in doubt that's going to change things immediately coming up. We're not getting US data at the moment because of the shutdown. Sure, we're coming into earnings season, but we're not getting into the major heavyweights yet. And so I think overall, it's unlikely that we're going to see, unless always there's open to a black swan, so there's no point even talking about it. Unless we get a black swan, there's not an obvious reason fundamentally for narratives to change at the moment, which is probably positive for stocks. They continue to grind over that wall of worry. If you want to see a change of narrative, it's probably going to come internally, and what I mean for that, it's going to come from markets that just get too stretched and trip over themselves. And if you're looking for a source of that, the most likely one for me is, as you know, we've talked a couple of times this week, I do think the dollar is ripe for a year-end rally, and that might put a few positions under pressure, which might have some spillover effect. That said, as long as it stays relatively, not too rapid, it's a controlled rally, I don't see it having too much cross-asset impacts, but it's what I'm watching for.
Nassim Taleb says there are no more black swans. They're all white swans. We know what the risks are, and as a result of which we just kind of got to wait for them to come and deal with us. Mark, just kind of work me through this dollar rally. What happened? So if the dollar starts to rally, and I'm looking at the screen this morning and I'm starting to see some early evidence of that, just walk me through the process of how this will ripple through into other asset classes and how that process will work.
So I think most importantly, a stronger dollar is a slight tightening of financial conditions for the rest of the world. And obviously, many assets are priced in the dollar. So you take one of the most consensus trades in the world out there, bullish gold. It makes sense. It's a logical trade, but everyone's on it. Now, if you have a strengthening dollar, that is, immediately that's the other side of what gold is measured in and how people have their gold trade on. Now, the two biggest marginal inputs for gold, I'm not saying they're the fundamental drivers, but the marginal inputs are the dollar and higher yields. And we're in an environment where higher yields are being pressured higher. So if you suddenly have a move where people are losing on their short dollar positioning, which is where the speculative market is, it is true that the world is structurally long dollar, but the short positioning is short dollar. So they get squeezed on that. They get squeezed on a consensus long gold position. And then suddenly they start going, hey, we're starting to hurt in some of our positions into year end. And that's where they start saying, why don't we start taking some profit in some of the other things that have been working very well? And that's how you can get an internal change of narrative. Now, I've lined up that scenario. That's not my base case. My base case is actually that equities continue to kind of grind higher over this wall of worry, because it is a very, very high bar for us to get an internal hurdle to trip us up. It can happen. It's what I'm watching for. And the only reason I'm watching for it is because there's not a fundamental scare in the horizon. So stay probably bullish, but expect dollar to bounce.